I'm Doris. I'm here to show you my stock account update. Today my stock account has made a gain of $320. US stocks closed higher on Friday on Apple and regional banks. So first, let's take a look at my account. Today my account's PL is $320, which is a gain of negative 0.46%. Right now, the net asset of my account is $70,320. Today, United Natural Gas made a gain of 0.98% to $6.17. Today's market generally closed higher. Dow Jones Industrial Average closed 1.65% higher. Nasdaq Composite closed with a gain of 2.25%, and S&P 500 closed with a gain of 1.85%. Today, consumer electronics, oil and gas all showed a gain of more than 3%. Regional bank stocks have rebounded sharply. Shares of tech giant Apple surged after reporting earnings. U.S. nonfarm payrolls data rose 253,000 in April, lowering expectations of a Fed rate cut. 3 U.S. major indexes were mixed this week, with Nasdaq up less than 0.1%, the S&P down 0.8%, and Dow Jones down 1.24%. Apple closed 4.7% higher. Apple beat both revenue and earnings expectations in the fiscal second quarter, thanks to iPhone sales growth. Regional banks were generally higher. SPDR S&P Regional Banking ETF rose 6.4%. The Pac West, which plunged yesterday, closed up 81% higher. Western Alliance closed 49% higher. Shares of regional bank companies have been under pressure this week, as traders worry that other institutions could face the same fate as Silicon Valley Bank and Signature Bank. Both banks closed down in March. According to Liz Young, head of investment strategy at SoFi, despite a rebound in the regional banking sector on Friday, the impact of the banking crisis is not over. She said, when the bad news about the banking industry began to spread, it was interpreted as a unique situation for a particular institution, but the reality is that tight liquidity in the banking sector is a widespread challenge. Young said, initially they have the deposit flight, but now the other pressure is not just all the market capitalization security on their books. So I don't think the banking storm news cycle may be over yet. I don't think they will die naturally. That means they won't suddenly heat up and go cold, but without any impact. Over the past week, money market funds have climbed to a record high as the resurgence of the banking crisis exacerbated market fears and a high interest rate under the Fed's rate hike. Abroad, $47.2 billion flowed into the U.S. money market funds in the week ended May 3rd, bringing total assets to a record $5.31 trillion, up from $5.26 trillion in the week ended April 26, according to the Association of Investment Companies. On the economic data front on Friday, the labor market reported that U.S. non-farm payrolls rose 253,000 in April. Economists surveyed by Dow Jones News expect an average increase of 180,000. U.S. unemployment rate unexpectedly fell to 3.4% in April from 3.5% last and 3.6% expected, and the average hourly earnings annual rate rose 4.40% in April, 0.2 percentage points higher than previously and expected values. Ahead of the payrolls data, the Fed announced a 25 basis point rate hike on Wednesday and suggested that it would suspend its movement, but Fed Chairman Jerome Powell said it was too early to start a rate cut. After a non-farm data, CME's Fed Watch tool showed that the Fed has a 96% chance of a 25 basis point rate cut. By July, the probability of a rate cut at current levels was 59.5%, with the cumulative probability of a 25 basis point cut of 38.1%. Dubravko Lakos, chief U.S. equity strategist at J.P. Morgan, said, Our cost of capital rose at such a fast rate was 0.1% for a long time, then quickly rose and stuck to these higher levels, creating a whole set of problems. But we don't know exactly where the risk will be. The longer we stay at higher interest rates, the higher the probability of an unknown and risk. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.